Hello and welcome back to Dukas Copy TV. Now, every month the Investment Strategists Association of Geneva get together and discuss a variety of topics that may have affected their operations during the month. This could be the levels of liquidity, or maybe just what their favourite commodity has been, or perhaps economic trends. Well, joining me in the studio is John Plassard, the Director of Lewis Capital Markets and a member of ISAG.
Hello, Thomas.
Welcome to the studio, John. Let's just start by talking about macroeconomic news. What have you found so far this month?
In fact, we are monitoring the macroeconomic figures through a painting, what I'm calling macroeconomic triptych. Means three different panels making a global painting. And those three panels are China, the US and Europe. And if we look at this painting today, it's quite bearish, because if you take the latest news, for example on China, to monitor this growth momentum who's cooling down, everybody was expecting large stimulus coming out from the Chinese government, but they just denied yesterday morning. If you take the US panel, you can see that there is still big question marks on unemployment and of course prices in houses and fiscal tightening at the end of the year. And of course, if I take the last panel, Eurozone, Greece, of course, and the banking problem with Spain. And we know that the recapitalization of the banking sector in Spain is a huge problem.
So what are some of the asset classes that ISAG is focusing on, has been focusing on this month?
We are focusing on 5 asset classes. For example, on the Forex side, our view, if we take our objective of May 2013, is that the euro-dollar should be at 130. And the euro-Swiss francs, for example, should be at 123. If I may just say one word on the euro-dollar, of course, as you know, there is the Greek election on the 17th of June, and if the coalition against austerity should win, of course, we should break the support of 120. And on another hand, if the coalition who's willing to accept those austerity measure wins, of course, we should come to our objective of 130 faster than, of course, May 2013.
But that's providing that they come to that.
Exactly,
agreement.
exactly.
Yeah.
If we take the commodity asset classes, we are focusing on gold. It could be a hedge against the crisis, and also focusing on oil. On gold, we have $1,800 as a target for May 2013, and for the barrel, $106 for May 2013. Just one word on the barrel. We see that we are entering a bear market, who for us is not going to stay like that for a big moment, but there are opportunities now. If you go on stocks, for example, or sector who are working with oil or oil derivatives, for example, of course, shoes maker, airlines, or semiconductor, for example. The third asset classes we are also focusing on is equities. In our portfolio, we have 35% on equities. We think that actually the equities have a low valuation, that of course they deserve a higher potential return, and equity are more rewarding than bonds. Of course, there is a bear market today. The market is red, I should say that, but on the long-term side, the equity should be the best way to go. And now the two last things, we have big question mark on the rates. We are not changing our view for the Swiss rate and for the rates in the US, the short-term rates. We have 0.25 for both, but we think that the long-term rates, the 10 years rate should increase in the US and in Switzerland. And the last thing, credit, and include in these asset classes also govies. We are following, of course, govies like milk on the fire, I should say, and we only have 11% in our portfolio of govies, and a little bit more, that's 22% of corporate bonds. On our balance portfolio in euro, we prefer to have corporate bonds. That's why we have 22% of corporate bonds.
Just before we finish, just one question I wanted to ask, because we've had this previously before, looking at gold. I mean, over the last 10 plus years, gold has been quite a safe haven for a number of investors, but we've seen perhaps that may not be the case so much anymore, and there may be alternative places that investors want to put their money. So why have you focused particularly this month on gold?
We think it's a very good alternative to the crisis we have actually. If you look at the equity market, for example, volume are very low, and people might be willing to go again on these asset classes because there are too much uncertainties on this macroeconomic triptych that I told you before. So that's why we are focusing on that.
We'll have to leave it there, John. But thanks very much for sharing with us some of the information from the ISAG meeting. Thanks for coming in.
Thank you, Thomas.
That's all we've got time for on Dukas Copy TV for the moment. Stay with us, though. We'll continue to bring you interviews and updates throughout the day. Until then, though, goodbye.